Good morning. I'm here with Richard Burton from BHM Mortgages. It's November 2022, and we're talking after a period of some change and upheaval in the mortgage markets, Richard. We thought it was time for a bit of a catch-up. Things seem to be settling down a little bit now. We've had a change in government a couple of times, and it would seem, from my point of view as a non-expert, that things seem to be calming down, but of more relevance and more interest, I'm sure, to people is your view on where we are now.
Well, morning, Steve, first and foremost. So yes, I absolutely agree. It's been a bit of a weird time, I think, is the best way we can put it. The markets have been up and down. They absolutely have. Everyone will find a different person or people to blame for that, and we won't focus on that right now. But yes, it does seem to be settling. I mean, it's obviously common knowledge that interest rates are considerably higher than they were 6 months, a year ago, 2 years ago. Of course they are, but they are sort of steadying down at the moment. There's a lot of things in the press at the moment about rates being 6.5%, 7%, and in some instances that's true. But in 99%, or the majority of instances, that is absolutely not the case. There are still some reasonable deals out there, and I think they're sort of plateauing and becoming a little bit more affordable for people every single day now.
So what would you describe as being reasonable?
Well, I mean, it varies person to person, and that's the thing. And it always has done. It's not just now, that's always been the case. Mortgages need to be tailored for the people applying for them, be it someone buying their first home, be it someone remortgaging a home they live in, buying a new family home to live in, a property that they're going to rent out. We have to tailor it to that person. So at the moment, rates are sort of steadying off. I think for the last month or so, every time I've switched on my laptop, it's been rates are increasing and they're going up by X amount. Whereas now I'm starting to see them say, this one's coming down and this one's not changed and this one's becoming more affordable. And that's exactly what obviously I and everybody else wants to see.
And these are largely the fixed rate mortgages, is it?
Yeah, so fixed rate mortgages are what I'm sort of looking at now is what we're hoping to come down, because people like to fix just for the simple reason they can then budget, they know exactly what they're paying, and that seems important to a lot of people. Variable mortgages are the ones that can go up and down, and if it's what's called a tracker mortgage, it tracks the Bank of England base rate. When that changes, the amount you pay changes. Those are still relatively low. The worry behind that is if the Bank of England base rate does go up, that will go up alongside it. However, we are doing a lot of those for clients at the moment as well.
Okay. So essentially then the markets who set these rates on the fixed terms are not anticipating rates to go up significantly above where they are at the moment, if they're presumably, I mean, I don't want to stray into territory where you're, from a regulatory point of view, can't comment, but you know, is that effectively a sign that the markets are now factoring in a plateau in their minds as well? And they're not expecting rates to go up much higher. So if people are doing their calculations on where we are now, that's should be a good guide for where it's going to end up over the next few years.
I would absolutely like to think so. So I can never predict the markets exactly what they're called, exactly what they think is going to happen. However, very recently, the Bank of England base rate did go up, but that did not affect the fixed rates. They'd already built in what they expected to be that rise into their rates previously when we first heard on the news about rates going up. So that didn't affect things. And then since then, we have started to see a few of the rates come back down again. I would never like to turn around and say, look, next week they're going to be better than this week, or wait till Christmas and they'll be wonderful. There's no way of knowing that whatsoever. What we need to do is, when we speak to clients, find out what's important to them now and get the best mortgage arranged for them at this exact time is what's key.
Okay. And if I was thinking of moving house now, which I'm sure some of the people who are looking at this video will be in that position, well, they're considering a move. And is there any benefit to them to be talking to their existing mortgage provider? Do they give a loyalty discount or anything of that type? Or is it better to look at whole market at the moment and see what else is on offer? How does that work?
So it's always best to look at the whole of the market, so compare every single lender that's out there. However, that whole of the market would include their existing lender. So, for example, the clients I'm speaking to at the moment, if their mortgage is coming to an end and they're worried about the monthly payment having gone up and what that's going to do to their family situation, we will look at every lender out there, but we'll also go and contact their current lender as well and see what they have to offer. It's free of charge for us to do that. Of course it is. We'll look at those ones first, in fact, just to see what is available to them. And also we can tailor it more to fit their needs. If their monthly payment has gone up by £250 and they can't afford that £250, we look at alternatives. We could increase the term of that mortgage, for example, hopefully bring that payment down. We could look at how their borrowing's laid out, what other borrowing they've got, and putting things together to make it more affordable. We can work for them to make it as positive as it possibly can be. And often that is absolutely talking to the current lender. And if I do get discounts with that current lender, they will still get those discounts, even though we're staying with that lender. So it's kind of whole of market, including their own lender at the moment. Yes.
Okay. And if they end up with their existing lender, you don't charge for that, do you?
Oh, God, no, absolutely not. And if we end up with a different lender, 99% of the time, we don't charge for that either. So yes, whatever route we go down, we'll make sure it's as most cost effective for the client as we possibly can. And hopefully we'll take a little bit of the panic and a lot of the headache away from doing this process as well. Okay.
It sounds like a period of things calming down is upon us, which is good news. I think certainly from my experience that, a settled period is what people are after, and just to understand what their commitments are going to be across the board. I mean, mortgage is obviously a big part of it, but I think people like to know what's coming down the line. Thank you, Richard. I really appreciate your input on this.
It's my absolute pleasure. Good luck.